Hi, welcome to this video day. It is the 21st of November, it's Sunday. In this video, we're going to be looking at some trade setups. Now, trade setups we're going to look at are going to be Euro USD, Euro JPY, Euro GBP, and finally the USD against the Euro correlated currency, which is going to be the Swedish krona. Now, we've looked at these pairs in previous videos. We've been saying that, we expect the correlated currencies to have a big move to the downside. And we have actually seen a nice move in our favour. We've got great open profits, and we think there could be more profits to come. Now, in terms of anyone new to our videos, we're using a very simple strategy here. All we're doing is looking at the big fundamentals that drive the really big trends of 500,000 pips or more, just doing very simple analysis towards them and the sentiment of traders, and then using very simple technical analysis to time and manage our trades. Now, in terms of this video, I also to go through an edge, which most retail traders do not think about. It's an edge that any retail trader can get and use. And if you do, you can actually, over the longer term, get a better performance than the average hedge fund. I'm going to discuss this edge when we get to the charts. Now, in terms of, just before we look at the charts, if you want to learn all our trading techniques, check out our daily technical sentiment analysis of 14 FX pairs. Just go beneath this video, click the link, and you can get live access to our member center. You can also join our Facebook group of traders, follow us on Facebook, and finally check out our recommended regulated broker. And I'm doing some updates for the weekend in our member center, so I'm going to use the charts from there. So let's go over and take a look at them. Euro USD, you can see a nice move down in the euro, up 360 pips on this trade. I'm going to discuss this trade and the other pairs in a little bit more detail in a moment, and how you can get into them if you wish. But what I want to do first of all is go and look at the performance of hedge funds. Okay, now I've brought up Hope Place, which do a survey of a number of hedge funds, and you can see on this article, hedge fund industry performance year to date stands at 8.85%. Okay, that's the average performance. Now, a lot of beginners, when they come in the markets, think, hedge funds, they make hundreds of percent or whatever. They don't. They very rarely get into double figures year on year. Okay, now these are just hedge funds that are trading a variety of different financial assets. It could be Forex, it could be bonds, it could be commodities, it could be stocks. I just want to show you another hedge fund metric, which is this one here. It's to do with hedge funds trading the S&P. Hedge funds up 6%, the index is up 22%. Yeah, you'd be better off just buying the index and holding it. Now, in terms of the edge you've got over these professional traders is patience and not trading frequently. Okay, what they're interested in is trading short term, getting fees. A typical hedge fund will probably generate per annum 30% back of equity under management in fees. So if they've got $1 million, they'll get 300,000 back in fees. That's what they're interested in. They're not interested in getting the best performance. That's the average hedge fund. Okay, now there are some hedge funds that do trade longer term, but they're the minority. Let's say some hedge fund like Bridgewater, Ray Dalio, they'll be focused on the longer term, getting the best performance for clients. Most are not. They trade short term. So the edge you've got is patience. You don't need fees. You pay them as a cost. You're not making anything back. Okay, so you can get into big trends and hold them. And most traders just simply aren't patient enough. Okay, what they all want to do, I'll go back to Euro USD, they'll want to trade every twist and turn of the market in the short term. You can't, because you're competing against the big boys who've got algorithms, etc. Okay, they can manipulate the short term, they can't manipulate the long term. So our view is go for the big trend, okay, and basically try and hold it. You don't have to do much work if you focus on the long-term trend, but you can make really good returns. Now, in terms of this pair, it's running nicely for us. If it gets to that target there, and I think it will longer term, that basically will give us 14%. If it gets this target here, 110 on the monthly chart, that's going to give us 6%. Okay. Now, in terms of when you're trading, you need to know what's driving the big trend, and just use a very simple fundamental analysis, which I'm going to do right now. There hasn't been too much change in the fundamentals since last week. They remain the same. That's why the euro is going down. I'm just going to show you some charts here on our PM update. If you're looking at trading big trends, you want to know central bank policy going forward and the health of the respective economies. Now, in terms of this first chart, it's to do with inflation. Now, inflation basically high in both Eurozone and the US, but it's higher in the US. You can see down here, I've got my cursor, core inflation difference, Euro USD. That's going down, okay? That means that inflationary pressure is worse in the US than in Eurozone. That means that the Fed will be more hawkish than the ECB going forward in terms of reducing stimulus and raising rates. So the euro will the euro will fall in response to that. Okay. Now, in terms of the relative health of the economies, I showed this chart last week. Dotted line is kind of where the economy was kind of heading before COVID hit. You can see we just hug the dotted line. This is the US, the lighter line. Then you get COVID hit, massive impact. Then we rebound from COVID and continue higher. Okay, so we should get back to trend. Look at Eurozone, goes up. Then the bigger drop. It's not as near to trend as the US. It's struggling. Okay, so that means, yeah, obviously again in terms of central bank policy, Eurozone cannot raise rates as quickly as the US going forward. Okay. Now, in terms of ECB, they're doing stimulus, they're printing money. So are the Fed. But the Fed have said they're cutting back their stimulus. That's not happening in Eurozone. They just keep printing. They cannot stop printing money because the zone is in such bad shape. Okay. So you've got ECB printing money going forward, no end to that in sight. Fed cutting back stimulus. Rate rises will come quicker in the US than in Eurozone. A lot of people in the media are saying that Eurozone will have to raise rates. They can't. Just basically because the weaker southern nations cannot take higher rates. The EU is all diverse economies running at different speeds. It's not the United States of America, okay? So the ECB have a real problem going forward. In terms of high commodity prices, which we know we've got, they have more impact on the EU economy than on the US economy, okay? And I'll just put this chart up again. I showed it last week. I just want to show it very quickly for new viewers. Orange line, when commodities are high, you get a blue bar, which is a recession quickly following. Look at the next one here in 1980. Recession quickly follows. This one's a bit of a smaller one, but again, you get a recession. Look at this one. You're going to get a blue bar, recession, okay? And yeah, bulk of media are pretty bullish of Eurozone. That's not borne out by the facts, okay? So that's the background. Those charts are on our PM update. What you need to do is just find sources where you can get an idea of the fundamentals, then make your own judgment. We use other sources, obviously, see who we're using here, Macrobond, Rabobank, and Nordea are the main ones, okay? So let's go back to the chart. Right, back on Euro USD. Now, in terms of, earlier on I said, if we reach second target, that is 14%. I mean, if you're trading with just no leverage at all, let's say use some conservative leverage 2 to 1, well, that would give you 28%. And when you think in percentages and longer term, it really helps you detach yourself from the short-term noise of the markets, okay? And I think a lot of traders focus too much on, short-term movements don't really mean anything. And what I mean by that is, in terms of the last trade we did, okay, we just showed blue candle comes up to 117. That's resistance at the time, and a big round number. We think it's going to hold. Want to see it hold, we'll come in on the red, okay? So we'll sell at 116.40. Then you get these candles here. Yep. So we kind of go sideways, really. A lot of traders, want to trade that kind of sideways action. I personally think it's a mistake because you're trading in what is a lot of noise. The short term does have a lot of noise in the price, and also there's algo traders in there who are out to pick off the short term day traders and make money out of them. Okay, so you can detach yourself from try and trade too short term. Obviously, you're focused on the long term. You're just patient, then you get your reds. Okay. And like I said, it's a decent profit so far. Now, if you're trading a long-term trend, you just basically always want to have your stop back behind the second level of resistance. First level is obvious here, body, body, body. That could easily go and hit that level, okay? Put it back behind the second level here, okay? So always have your level one stop back from an obvious level where other traders are going to cluster their stops at, and where algo traders are going to want to throw the price or push the price so they can grab the stops, okay, and make a little bit of cash out the retail trader. If you were not in this pair and you're bearish, I'll put a trade in when the open came. If we opened up round about where we are, then leave some in reserve in case for a rally back to first level. You've got to trade in the market if we just do run on to the downside. If we don't, you can scale in, okay? But for us, going to 110, then par, and we always like to look at the monthly chart. It's been a nice downtrend since the 122 level, and nice red this month. There's the level I think we'll get sucked to. That's our first target. Then we'll go on to our second target. So Euro USD is looking good. I just want to look at Euro JPY. Now, in terms of the Euro, it mounted an impressive rally here. But we're saying at the time, basically not retail traders, big speculators have built up a 2-year net long extreme. So speculators are heavily long. We think they're going to get hit on stop. We're pretty bullish of the yen longer term anyway over the euro, but with speculators so long the euro, we expected counter trend action, which we've got. Okay, so come up here, speculators really long, we come off the high, we'll just sell back through the round number 133, and then look, you get sideways action. Okay, you've got to put up with that if you're following long-term trends. Then you get the reds in your favor. Yeah. Notice a big blue here. Someone was asking me this on Thursday. Should they come out after this red went down and the blue started? My view was to put the stop behind 130 around number and just take that little bit of a retracement. Then look what happens. You get the big red. It hits our first target, 128. We can bank 470 pips in profit. And now look to put that back in, and I'll put it back in on a rally to 129, or at the first level resistance here, or on a break to new lows. Stop remains behind this level, second line resistance. We're going for 120. That's another 850 pips on the downside. And in terms of the yen, why we really like it, not just against the euro, is it's a safe haven currency as well. Not only are speculators really short the yen, but we're expecting the markets to move from risk on to risk off. Okay, they're risk on at the moment. The yen is doing well. Risk off comes, the yen will really motor. Okay, so look at that one. Another one, Euro GBP. Saying here on this rally, Euro a sell in terms of, if we look at the economies, UK economy is arguably doing better. But what I think is even more clear cut is the Bank of England will be raising rates soon. Eurozone nowhere near raising rates. Okay, so you get the big rally up. That's exhaustion for us. We want to see some evidence that this tail is exhaustion. We get it the next day. Tail can't get to tail. Coming on the red. A little bit of action against us. Then 1, 2, 3, 4 nice reds. Blue natural correction. Big red. New daily lows going to 80. Okay, so this is a nice looking trade as well. The only thing that can come in to this is probably a little bit of Brexit brinkmanship between the EU and the UK. But at the moment, this one is running really, really well. And fair value for this pair is at 80. So a lot of pips to go on the downside. Let's go to our last pair. Last pair, USD SEK, and the USD is picking up traction to the upside. Now, in terms of euro correlated currencies, say frequently, the euro is in a strong downtrend. The correlated currencies very often go down quicker than the euro, vice versa if you have an uptrend. Okay, so it's kind of a more extreme move. Now, in terms of this pair last week, we were looking for this big 880 level to break. It does break decisively, and now we're well clear of it. Now, in terms of this pair, we've got 9 as our first target. We're nearly there. 950 is the second target. I just want to show you on the monthly chart. Here's the 9 level. Okay, so these candles have your 2 bodies and the tail will be cleared out. You'll be through a big round number up to 950. You go up to 950, that's a massive move. Okay, now in terms of if you wanted to play this pair, my own view would be to buy a dip back to this first level support. Okay, this is really strong support we've got to stop behind. If we don't dip back, wait for a break of the big 9 level. If we go through the 9 level, your stop can be behind these candles here, behind 890. You've got a lot of upside potential. That will give you a 5-to-1 risk to reward on a breakout. Okay, be 6-to-1, I think, if we dip back. Yeah, about 6-to-1. So yeah, they're the pairs. Obviously, I'm saying in this video, yeah, you focus on the longer term trend. You can avoid the noise. Okay, not every long-term trend you go for is going to reach target. You don't need many to make really great long-term profits. I think patience. A lot of traders say, "Oh, yeah, I'm going to be patient," or they want to be patient. It's the only way, really, that retail traders can make long-term profits. We saw hedge funds, just in single digits for the year. I know traders, members of ours or traders that I know this year, making 20% plus, some making 50% plus. Longer term trading is the key to those profits. Okay, and also if you focus on long term, it's a lot less stressful. The odds are better. It's a great way to trade. Right, that is the video for today. Thank you for watching it. Take care. Have a good day.